Look at one of the most important fundamentals when it comes to trading, which is your trade management. So pay close attention to this, guys. It's really, really important. Now, with these little techniques, you're going to be able to hold trades that are 15, 20, 30, sometimes even 50 are without breaking a sweat or having any psychological barriers, right? So you need rules for everything, not just for your entries and your exits, but rules for knowing when to move your stop loss to break even, when to tighten your stop loss, when to scale out, when to come out the full position. All these scenarios, I'm just going to explain it right now. So pay close attention. This is very, very important. So you've done all your analysis and you're expecting a reversal from this area. Again, this is probably a boomerang, 3 aces, or a slingshot. Okay, so you've entered the market. Once you've been triggered in now, you've been triggered in, the first thing you need to look for, do not move your stop loss. Your stop loss is here. Do not move your stop loss until, because price can still do something like this, it can pull back. Ignore all the fluctuations, right? Because it can still go long. Do not move your stop loss. Do not get emotional, right? So just bear that in mind. So once the market reverses from this area, whether it's compressing or it's ranging, once you see any form of momentum on the 5-minute or the 15-minute time frame, especially the 5-minute, with strong momentum, right? You need momentum. You need 1 or 2 strong bullish candlesticks. Bearing in mind your TP, you've based your TP of, let's just say your TP is up here somewhere, right? You've done all your analysis and you've got this TP. So this particular TP is where you want to bank 80% of your trade at a conservative area. So let's do this here. 80%, right? This is where you bank 80%. But your long-term optimistic TP is probably somewhere, let's just say up here. So you've got your 80%, and then you've got your, let's just say there's a banker block here, and this is 20% of your TP, right? So this is an imbalance, actually. You've got an imbalance here, or a banker block, same thing. And a little stop hunt, there we go. So your TP can be here. Again, the TP is irrelevant. It could be anything. Right. The most important thing is have a plan for having 80% of your trade, or you can test it and have 70%, 60%, whatever suits your boat. But what I do personally is 80% at the most conservative TP. The reason this is conservative is because this is the bank level that took out structure. So the most conservative area. Okay, so this is the level. Once price rallies to the upside, what's going to happen is this. On the smaller time frame, on the 1 minute or the 15-minute, it might just move around. And then boom, you've got momentum. Okay, when this happens now, very important. What you need to do is do not put your trade on break even. Do not do that, right? Or anywhere up above there. The reason for that is because of this. Put your trade below the most significant bottom bit of the structure. So your trade is still not in break even, but you've probably reduced 90% of your trade. So already your psychology is simple and a piece of cake. The reason you don't want to put your trade on break even is because many break even traders get stopped out. Why? There's unfilled liquidity down here because the market, a lot of the time, it likes to pull back, fill the very, very extreme liquidity level or even equal lows, and then it can rally to the upside, right? So that's why you don't want to put your stop loss on break even, because you'll get stopped out a lot of the time. So always, always, always remember, put your stop loss and tighten it to the most significant low and structure. Then move your TP into break even as time goes on, right? So that's the first rule of thumb. Second scenario is once price rallies, do not touch your stop loss until you see equal lows on the 15-minute, right? So once you see this and you see something like this, and then you might see, I don't know, let's say a rally, do not touch your trade. Even if your 5R, 2R, 3R up, ignore it. Let the trade management rule come to you. So let's just say we see something like this, and then we see equal lows. Finally, once you've got your equal lows and it rallies to the upside, this is the first scenario. You see the equal lows, draw them up, right? And now prepare for a stop hunt, but you still don't move your trade onto break even. So where could the market reverse from? It could reverse from this imbalance, or maybe there's a bank level down here or a banker block, etc., etc., etc. But what you want to do is price could obviously react of this imbalance or down here, or maybe a bank level down here. But once you see the equal lows and you see that stop one, and then when it goes long, let's just say it reversed from this area here. Once you see that, then you move your stop loss below that structure. Okay, so your trade will be here, stress-free, 2 are up. Fine. So you've done that. You still hold the trade. It's still rallying in your favor. Then eventually, you know, prices rallying. You might need to be updating this depending on the momentum. Everything is always updating. Just remember that. Once price approaches your conservative take profit, boom, you've banked 80%. You've banked 80% of your trade. Fantastic. What's this? 7.9R. You've banked 80%. You got 20% running. Do not touch the trade, right? Because price can still do this. It might go short and then it might go long. Be patient, right? Just be patient until, boom, we see the equal lows. Right? We see the equal lows. Then you look for the same thing. And you look for the same thing. And let's just say on this scenario, there might just be a bit of a banker block here. And then price obviously drops, does a stop hunt of this area, and then goes long, right? Or it could just do a slingshot, which is a stop hunt of the banker block. Right, whichever comes first, just wait for it. But once the stop hunt is complete, let's say it goes to the slingshot, then the remaining 20%, you move it up, right? And just keep repeating this until your main take profit gets hit. It's as simple as that, guys. Very, very simple stuff. And it just makes psychology a lot easier. Also, what you want to do is, yes, let it hit your take profit, right? But there's always that scenario that it can just continue going higher. So to avoid this, and you're still long, once price is going up, whether you've come out early or not, your stop loss is here, so do not touch it. Yes, it can take you out, and this is when you exit, right? Because sometimes the equal low might rally to the upside, and then what can happen is it might not even reach your bank level or your banker block, and then it might just, you know, start going short. But you still hold your trade. Do not get emotional. Be very systematic and mechanical until you get taken out, right? So just leave your stop loss there until you get taken out, or decide to just hold it for the full position. But again, backtest both scenarios. Which one are you more profitable and why? Now let's look at the trade management and my thought process when I capitalize on this 15R trade. So first of all, again, we just covered this. We got triggered in. There's the banker block entry, there's compression, third tap, boomerang, etc., etc. So let's actually zoom into the market. Let's go to the 5 minute. And finally, this is our candle that gives us the indication. So, okay, we got triggered in, do not touch anything. This candlestick on the 5 minute, this is momentum, right? You need minimum 1 candle or 2. This is enough. So once that happens, your stop loss goes right there. So you've already reduced 80% of the risk, right? So that's what you do. Then you let the trade run, let it run until you see equal lows. And obviously, as you can see here, equal lows has to be on the 15 minute. The 1 minute and the 5 minute are just not strong enough. Then there's equal lows there. Okay, perfect. There's equal lows. But there is no stop hunt, right? You need a stop hunt of the equal lows so you can move your stop loss into profit. So let's move this over here. It's still not ready. Your trade is still here, right? You reduce your trade by a lot. Let's go with the market. Let's see what's happened. So this is extremely important. Notice how, and I remember this happening. So let me just get the stop loss tool out. So my trade has been here, right? Let's just move it here as a reference. Now, first of all, there's lots of momentum, there's compression, it then obviously rallied to the upside, but there's no stop hunt. I still do not move my trade to break even because I know that even if this happens and we see some momentum, maybe even a new high, right? I know the market can easily just do this, and then complete a stop hunt and then go long. I know that it's happened a billion times. So this trade is still here, right? Still risk-free. We're not really risk-free, but we've reduced 80-90% of the trade until we see the equal lows. It's very important. Wait for the equal lows, regardless of how much profit you're in. If you focus on the profit, you're gonna get emotional. Wait for the equal lows. Price obviously rallies, etc., etc. Then boom, equal lows. There we go. Equal lows, perfect. I'm still full risk on the table. I'm being very, very strict with the rules management. My stop loss is here, etc. But let's just leave it there as a reference. Stop loss is actually there. Once we've got the equal lows, we need to wait for a stop hunt. Right? We still don't take the trade out. We've already banked 80%, right? So 80% is already banked here. The main take profit. So 80% is banked here. 80% is banked there. Before the TP was here, actually, this was my 80%. Remember, it was in confluence with the equal highs that we had here and the bank level up here somewhere, right? This was originally my 80% trade. And the 20% was the main take profit, which is the start of this liquidity pool, okay? But because there was so much momentum, I had to update the 20% and move it up to here. So I updated it, but I'm still following the rules and the trade management, right? So let's remove this. 80% got hit right here, fine. Yes, you can hit the full amount, which is fine, right? But there's always that chance that price might do this and then it just forms a large pattern, right? Easily can happen. And then boom, one more rally to the upside and you capitalize on even more gains. And we've got bank levels here as a reference. It's happened a billion times to me before. So this is why I follow the rules very mechanically. Now, okay, 80% got banked. 20% now is up here. So you can see, and if we zoom out, it's in confluence with a stop hunt and a bank level down there. Okay, fantastic. Now that there's equal lows, what's happened? There's been a stop hunt of what? We had multiple plans. We had the imbalance, which is here. So we had a bank level at this area, bank level, imbalance, liquidity, right? Don't know which one's going to react from until it does. Once there's been a reaction and it rallies to the upside, now I can breathe. I've already banked 80%. The remaining 20% goes here until I get taken out. And I've got all this buffer to play with now. So not only have I increased the profitability and the growth, I've reduced the risk while increasing the gains, okay? Price obviously just took me out, but a lot of the times and sometimes the market does actually do something like this, and then it just rallies up. So this is why you need to follow the rules, but make sure that the first relevant TP is 80% because of your psychology to make it easier. Now let's look at this example on the following day. The bank block setup, there was a break and retest, the reversal of this trade. Price obviously triggered me in, went in my favor, but this bank level's done. The first relevant conservative TP was this particular area. Normally I've got time to move my TP further down, but this momentum candle just completely took out 80% of my move. I've got 20% running, but I need to wait for equal highs, which is the same, but on the flip side. There we go. There is our equal highs. So you can see equal highs. Need to wait for a stop hunt of the equal highs. Then I could move my trade. There's a stop hunt. Fantastic. And the remaining the remaining stop loss on the 20% goes there. But remember, when the market pushed down with momentum after this candlestick, I had no time to do it over here. Oh no, this is the 50 minute. Let's go to the 5 minute. Yeah, this was, yeah, here we go. This is the candle. So there was one bearish candlestick momentum, not enough. It needs to be the size of minimum this sort of candle. Finally, after this Marabuzo, especially after this one, that's when you move your trade from here to then this significant high, because there is liquidity at these little gaps and there's normally a stop hunt and then a drop. This is why there's break-even traders don't succeed, because they put the break-evens way too soon without taking into consideration a potential stop hunt on the smaller time frame. So once this happened, I moved my stop loss above the structure, kept on dropping. I still got 20% running, reduced the risk by 20% as well. 80% has been banked at this area. Now there's equal highs, right? Especially it needs to be on the 15 minute. There we go. It's not perfect, but this is fine. Then I move my stop loss towards this area, right? Move my stop loss towards that area. Then the remaining 20% that I've got, we can update this. Just kept on moving it down towards this area down here, this bank level. There's also equal lows here, so I know there might be a bit of a stop hunt. Then it took me out. You know, this is when it took me out. The remaining 20% took me out. Simple stuff, right? So just take note on that and just follow the trade management rules. It's really, really, really important, guys.